Hello, everyone. Hello, hello. Good evening, and welcome to Toledo to the World with DebraSue. So happy to have everyone on with me tonight. And if you're not on, I know you're going to be here because I promised you last week and during the week that we were going to have a very frank discussion with the family. And the family, my friends, are you and myself, others who may need to hear exactly what we are going to talk about tonight. The very first thing I want to do before we get started is to have a moment of silence for a couple of young people who recently passed in our community, Kimani and young Mr. Simmons. And we just want to take a moment to just symbolize their importance to us and that we do remember them. Thank you all for that. Okay, so we are going to get started because we have a very important subject to talk about today. And it actually deals with how I opened the show this morning or this afternoon, this evening actually. Has to do with something very, very important that we all need to talk about, family. And it's right now. The time is now. The time is actually been now. It's been for a while now that this is something that we all have on our minds, but we probably very rarely follow through. We think about it, we know we need to talk about it, and we need to talk about it with our family members. This is something that we all need to sit down and discuss very, very seriously. What am I talking about? Talking about life insurance. I'm talking about life insurance. And I have someone on tonight who is a life insurance and insurance specialist. He deals with life insurance, he deals with answering Medicaid questions. He is the man that I decided I needed to have on my platform tonight to have this talk with you tonight, family, because it's very, very important. And we're going to talk about why in just a few minutes. But if you will, I'd like to have you help me welcome Derek Capito to the stage of Toledo to the World with DebraSue. Welcome, Derek.
Thank you so much. Thank you for having me on your platform. I greatly
I'm
appreciate
so very happy to have you. And all week I've probably been a pain because I have had so many questions myself regarding life insurance. And I have life insurance, but I know many people who do not. And unfortunately, the idea of life insurance and coverage over the last, I want to say probably past decade or so has been thrust in our face because of the many, many issues that we are having with people becoming unalived, and unfortunately is involving many of our young people who thinks about buying insurance on young people because they are supposed to outlive us, right? What in your mind, Derek, or in your professional stance, I should say, from your point of view, why is life insurance such a taboo discussion, especially in African American community, people of color? We don't discuss it in our families, and many people don't. And we can see that as evidenced by the GoFundMe's, the t-shirt sales, the dinners, to do fundraising. What is it, do you think, causes this thing to become such a taboo that we don't talk about it? Is it money? Is it, should we not talk about it too soon, because we don't want to talk about our own demise? What is your input on that?
my input on that is the lack of understanding of generational wealth building. And what I mean by that, given examples, when you put a policy on your children, right, you're
Mhm.
setting them up for generational wealth transformation. So, I'm going to say the 70s and the 80s, insurance was very prevalent in the Black community. You had the insurance guys walking around the neighborhood, meeting up every Tuesday to get their payment, this, and that. We've evolved so much from that. And
Mhm.
the one thing that the Black community realistically doesn't properly understand is that I've had this conversation with my family, and they're like, "Yo, I ain't going nowhere. Why you talking about my death and this?" I'm talking
Exactly.
about bridging the gap of generational wealth transformation.
Mm.
So when you put a policy on a child, several factors are kicking in. One, you put a nice dollar amount on that child in case anything happens. For two, if it's a cash value policy, you're giving the child a head start. Giving an example, I put $50,000 on my daughter, right? When I did that, she was 8 years old. Now she's 21. So if she needs some sort of financial offset, hey, dad, I need a loan, this, and that. Okay, I've been paying in your policy for quite some time. Let's see what the equity is in that.
Mhm.
Living benefits of her policy. You know what? You got about $12,000 in equity in that. Let's go ahead and borrow from that and go ahead and get you what you need to do. But we got to pay.
Mhm.
We want to make sure your face amount will stay the same.
Explain to our audience what equity is.
Equity is meaning a whole life policies. Now, there's several type of insurance policies. You have term. I use that as short for temporary. So
Mhm.
term goes from 10, 15, 20 to 30-year mortgage. I mean, not mortgage, but overall insurance.
Right.
So with that being said, after that term, you start over to zero. So if you get a 30-year term, and there's some great assets on that because it's ratherly inexpensive, but 30 years from now, it's going to erase. It's like auto insurance. It's going to just, once you hit that 30 years, you get nothing out of it. Whole
Hmm.
life insurance means you're building cash value. And there's several different plans for whole life. You got IULs, index universal life insurance policies, which means they follow the index, the stock market. The benefit of that is once the stock market grows, your value grows, your face amount. If the stock market falls, you never lose your face amount. So
Mhm.
there's a lot of that going on. But yeah, cash value means it's building equity. Every time you make a payment, that's in your savings.
So let me summarize that for folks. When you have a policy that is a cash building policy. That's what equity is. It's cash building. It's just like if you take out, you have a home and then you go to the bank and they'll tell you how much working equity or how much you can take out on a loan against your house. So if you have a $20,000 house, they will loan you anywhere between 60 and 75% on your house. That's the equity that you can borrow. So the same thing applies to life insurance. Once you get the types of life insurance that Derek is talking about, you are also able, your child at some point is also able to borrow against that amount. How do they have to pay that back, Derek? Or is that something they can take out in hand, or how does that work?
They require that you pay it back, but most people, I won't say most, but a lot of people don't pay it back. So what that does, that reduces their face amount. So give an example. If you have a $50,000 policy and you borrow 10 because the equity is that amount, your policy falls to 40,000 now. So either
Mm-hmm.
you receive the interest as well if you pay it back,
Mm-hmm.
almost borrowing from your 401k.
Okay.
So once you pay it back, you pay yourself the interest as well.
I like that. Okay. And then let's talk about the other types of policies, because you have the one we
I,
just talked about.
you will.
Yeah, the whole life, right?
Yeah.
Okay, that builds equity. What about other types of life insurances?
So there's other types. There's final expense for people who have a hard time finding insurance. Final
Mm-hmm.
expense burial. It's minimal. Hey, I just need 10,000. If anything happens to me, my family can lay me to rest properly. That's what's final expense. Final expense is guaranteed issue. So if there's any health offsets, it's looked upon past. They won't use that against you. Uh,
Mm-hmm.
Final expense goes up to a maximum of $25,000. So therefore, if they have, give an example, heart conditions, had a heart attack 2 years ago, and no, they're afraid to give them insurance. Final expenses will be the key. You have severe diabetes, final expense. You have other, serious issues that the medical industry looks as critical illness. That's where guaranteed issue comes in. Then you
Mm-hmm.
IULs that I spoke about earlier, right? There's
Mm-hmm.
IUL that I deal with. We call it the $1 million baby.
Okay.
What you do is something that you continue to invest in, but again, it grows with the stock market. So once you start off with a child, giving an example, a 2-year-old,
Mm-hmm.
pay into that policy. As you get some extra cash, you pay into it, you pay into it. As it's building its equity, by the time that child, depending, because you got to get an illustration to kind of figure everything out, by
Sure.
the time that child is like 30 years old, they could have $600,000 in growth.
Wow. And so that's why it makes sense when you are looking for a life insurance policy to get one on your child when they're younger and they don't have all the pre-existing conditions. I have a couple questions here. First of all, Antonio Woodson had said, "Hey family." What's up, Antonio? And then little Miss Eliza said, "How do you get insurance when you have a pre-existing condition? How does that factor in?"
So that factors in this way. Basically, there's multiple carriers that I'm appointed with. Once we go through the application process, it's going to automatically do an MIB, Medical Information Bureau report.
Mm-hmm, mm-hmm,
Once that Information Bureau report comes back, it's going to identify that person either as guaranteed issue or whole life. Okay. So
Okay.
when you become guaranteed issue, the offset is that there is a 2-year grading period. And what I mean by the 2-year grading period, you pay into the policy for 2 years. After the 2 years, then you get the full maximum benefits of the death benefit, right? But if
Mm-hmm.
a person passes away within that 2 years, the premiums are paid back plus 10%. So that's the offset.
Mm-hmm. So it doesn't mean a person with pre-existing conditions can't get insured. It just means that there's a waiting period for you to get the amount that you want to be covered for.
Correct, the face amount. Yes.
Okay. And see, I think that's what scares a lot of people. If you have a pre-existing condition, diabetic or all these other things, especially if they want to tag on to certain people, we think the insurance is just going to be through the roof, right? Or that we can't get it, right?
Right.
So she asked, the other question she asked is, why is there a waiting period? And I would imagine it would have to do with and this is my guess, and you could correct me. I would think that people who have pre-existing conditions, we wait until we're older to go get insurance, or we know something imminent is going to happen, right? And within the next 6 months to a year, something's going to happen to us. And so insurance companies are not stupid. They are they are companies, right? They also need to look out for their bottom line. But after 2 years, by law, they have to go ahead and get you covered like they promised, because you are paying a premium. But let me let you speak on that.
Well, you hit it on the head. You hit the head on the nail. I mean,
Hmm.
basically, that's the reason why. If
Hmm.
someone comes with a pre-existing condition, and they give the 2-year period because on average, that's when things are pretty much sustainable. If someone
Sure.
has, let's just say, early stage cancer, right, and they realize they have that, so they get the graded period of 2 years. The anticipation is for them to live past the 2 years so they can pay out those benefits. Because, like you stated, they are a company, so they're looking at
Hmm.
the bottom line. So once you pass that 2-year grace period, again, it's not like you paid into it and you get nothing back. If you're paying into it for 2 years and a year and a half something happens, you get
Hmm.
those premiums back, which is unfortunate because it's not the full face amount, but you do get a return on your investment.
Sure. And along those lines, I think my next question to you would be, um, for people who have pre-existing conditions, do they necessarily set a limit? Well, first of all, the first question I want to ask you is something you just mentioned, my people who may come in with cancer. Don't they automatically have to give, does that 2-year waiting period also count then? Because a lot of companies, if you've been diagnosed with a terminal cancer, they will pay you living benefits, don't they?
Correct. Now, here's the thing with the living benefits, again, with life insurance. If you have a whole life policy and you don't have cancer, so that's hence the young age where you get in there young. And
Sure.
years down the line, because the premium is fixed, the premium doesn't increase, it doesn't
Mm-hmm.
raise because it's the way the policies are structured, right?
Mm-hmm.
So if
Mm-hmm.
structured correctly, as years go by, you get the policy, given an example, at 16. Now you're 44 and you've been
Right.
diagnosed with a critical illness. What you can do is call your carrier and say, hey, listen, insurance carrier, I've been diagnosed with cancer and I have a bunch of treatments. They'll
Okay.
take money out for that face amount and give that to you direct and start paying for your treatment. Now, to reduce your face amount, but you receive those living benefits,
Mm-hmm.
critical illness. So that's called the critical protection clause in some.
Okay. Hello?
Yeah, can you hear me?
I can hear you now. Okay. So then let me ask you this, because to my listeners, because listeners are on Instagram, on YouTube, on Roku, on all over the place. Okay. We have 5 platforms that we run on. Let me just put this as simplistic as I possibly can for everybody, okay? Life insurance is a good thing to have. Even if you don't have a tremendous amount, it will help you take care of your final expenses so that your children do not have to carry that burden. Okay, they want to give you a nice funeral, so on. Okay, but life insurance for most people is crucial that you invest in it, people, for generational wealth. Most of us are not going to have $1 million by the end of our lifetime. Most of us are not going to have a $500,000. Okay, $250,000 is easy to leave to your kids. It's easy to leave for your children. $250,000 will take your kids a lot further in life than $10,000 will, because it's going to take $10,000 to get us properly taken care of, okay, according to the law.
Mm.
So I want you to think very, very carefully about this, because if you think about this, the money that you all put into dinners, t-shirts to raise funds, and so on, it would be a fraction of that to get insurance for yourself and for your children. I'm going to give you a classic example. I applied for $25,000 worth of insurance with Mr. Capito for one of my grandkids, and it was less than $10 a month.
Right.
You hear me?
Whole life.
Whole life, which means this kid is going to have cash value by the time she's 21.
Mm.
And you can't tell me that you can't do it. And I worked in the music industry for years, and I used to get on my I used to get on my artists when they come take a puff or pull out a bag, and I'm like, life insurance will cost you less than what you're getting ready to partake in right now. Life insurance costs less than that. If you Now, here's the key. I'm not gonna lie. I'm gonna say it like it is. You better have a good insurance agent, and I got you one right here. I got you one right here, because he's honest.
Yes.
And he cares about the community to make sure you guys are taking care of your business, because he sees the tragedies of what happens with people who don't.
Yes, indeed. And I can piggyback on that. You know what the wealthy do? The wealthy individuals, what they do is when they have a baby in their entire family, whether it's a nephew, a cousin, their grandson, they automatically start that child off at birth with $150,000, some even more.
Mhm.
And what they do, they combine that into a family trust. So every time a child is born, there's a policy put on that child.
Mhm.
So therefore, if anyone passes away within that family structure, let's say J.C. Penney. J.C. Penney had a $5 million policy, right? Back in the 1920s, the real J.C. Penney, the owner. And he actually reached out to Rockefeller and said, hey, J.C. Penney's was going down. I don't know how I'm gonna keep my business alive. What should I do? And the Rockefeller person says, hey, don't you have an insurance policy? He's like, yeah. He's like, how much? 5 million. He said, why don't you borrow against your policy and get your business back up? That's what sustained J.C. Penney's to this day.
Mm, mm,
So,
mm.
when you put money into a family trust, that's a whole nother conversation, but I'm giving an
Right.
example.
Sure.
You have a family of 5 and each one has a policy. If anything happens, the money goes into the trust. So therefore, it can be managed properly through the trust, and that's how they can keep up with generational wealth.
Mm-hmm.
So it's just angles.
It's this conversation is so overdue and so necessary, you guys, because again, that keyword, generational wealth, this is something that people do not sit around and talk about, and we don't talk about it with our parents, and we don't talk about it with our grandparents, because old schoolers tend to be a little bit offended when they think you're trying to rush them up off this planet real quick. But if you think about this as a business maneuver, you guys, this is literally, it's been done for years, just not by us,
Yeah,
but not by the common man, I should say. This has not been done by many of us. I'm not saying a lot of common folk, middle class to lower class people haven't done this, because some have. I personally know too that, had a $3 million policy, and they split it 3 ways between family members, but they all three. And there's another thing too, guys. If you have a situation and you have family members, brothers and sisters that are willing to take out larger life insurance policies, everybody pitch in and pay for it. This is how it's done, unless you already have, half a thousand $1 million in the half a million, that's not even a term, but $500,000 in the bank, and you pay for it yourself. If it's expensive, like $2-3 million to take out a six-figure policy, then everybody, if you have reliable folks, everybody be named as the beneficiary, everybody help kick in and pay for it. Would you recommend that, Derek?
I would recommend that. You want to hear something crazy?
Mm-hmm.
Celebrity wise, Barry White, no life insurance. Aretha,
Mm.
no life insurance. I mean, the list goes on. James Brown, no life insurance.
Mm.
And then when they passed away, the money went to an estate, and family members argued over it.
Yep.
Nothing was structured. So that's where we come in as a community. We have to
Mm.
structure things and plan.
Yeah.
Again, wrote a policy for, and I'm just giving general quotes, so don't quote me on that.
Okay.
26-year-old young man got a $150,000 policy. It was like $30 a month,
Mm.
whole life. So the younger you get in there, the better benefits you can get.
For sure.
And I
For
explained,
sure.
get an opportunity, you get your tax return.
Yeah.
Hey, if you get $3,000, put 1,000 in your policy.
Hmm.
Out.
Can you name some of those famous folks again who passed and did not? They have all the money in the world, but
Right.
didn't have life insurance. Who are those folks?
Aretha Franklin, Barry White, James Brown.
I think I heard, and don't quote me on this, family, but I think I heard that Tupac didn't have life insurance.
Yeah, he did
I
not.
do I do believe there's some entities fighting over Prince's estate right now because he had a lot of money and a lot of material things, yes, but when you're young, you just don't think about getting life insurance. I get that because we all think that we can live forever, but many of you, as you know, just looking at circumstances that have surrounded Toledo, and Toledo is not at all the only city that these tragedies are happening in. Okay, we know that the younger you are nowadays, it seems like the younger ones are knocking off, or unfortunately, I hate using that term, and I apologize for using that, but they're being unalived, quicker than some of the elderly people or older people like myself. I call myself I ain't elderly, but I'm a little older. But it's sad, and it's we think about that, and then we see all these, different kind of programs pop up to try and help raise money for these folks, and I think that's one of the saddest things in the world. It's beautiful to see a community come together, to try and support, getting life and situations taken care of for these young people. But it honestly, what's left behind for the family then once that's taken care of? What does the existing members, those who are worthy of it, I'm not in these two cases, I'm not saying who's worthy of what and who's worthy of not, but young people getting car accidents, young people, I'm hearing more heart attacks with 21 and under, on a football field, falling over from a heart attack. Something's going on. I don't know what it is, but how we can at least make that situation a little bit better is by having life insurance. And again, the type of life insurance that we're talking about is life insurance that builds cash value. You when your child turns a certain age, or if they come into a situation where they need some money, they can borrow against that policy, and it's really just not that expensive if you really think of what you can sacrifice to leave a good little pot of change behind for your children, or your whoever you designate as your beneficiary. Let's talk about what qualified beneficiaries are, Derek.
So beneficiaries are, you can have multiple beneficiaries. So if a woman has three children, right, she can say, "Hey, I'm getting a policy on me, but as a beneficiary, I want primary beneficiary and two contingent beneficiaries." So the primary will be listed as the child, maybe the oldest, and the contingent beneficiary will be the other two. Now, if
Mm-hmm.
something happened to that person, all three of them will have to be paid out. So it's not one getting it all.
Mm-hmm.
Uh, a lot of beneficiaries are the husband or the wife, or if a single person, the mother, the daughter, or things of that nature. So there's different aspects, and it's all structured around our conversation.
Okay.
Now, I wanted to touch base on the term aspect as well.
Mm-hmm.
When term policies, I write a lot of those as well. And when I write a term policy, those are new homeowners. Think about it. You got a 30-year mortgage. Why don't you get a 30-year term to closely match the value of that house? Something were to happen to that person, they don't want all the money up front. They want the next monthly payment.
Mm-hmm.
So if you match something up with your term, hey, we just bought a house. I want to get a quick policy. We have something through our insurance over here, but what can we get for this house in case if I pass away, how would my wife survive? If my wife passed away, how would the husband survive with the kids? So these
Sure.
are conversations. And last but not least on that conversation, the payout aspect, right? I had
Mm-hmm.
situation, and those are very unfortunate. And the children were unaware that their parent had insurance.
Mm.
So when they passed away, I, got information on that, and they were calling from an inquiry standpoint. Hey, I noticed my mom was communicating with you, or my dad. What happened? Oh yeah, she had this. I'll walk you through the whole process.
Mm.
This planning to go ahead with the GoFundMe, calling family members, trying to get some additional funds. And when she found out that her mom protected her and herself, it was a blessing. And that was a sad but rewarding conversation.
Sure, sure. So when you have an instant, let me ask you this, because this is one of the things I think also that some people become hesitant about when it comes to acquiring life insurance. How do you have this conversation with individuals who may be at their life's end planning process? I mean, for example, everybody may, let's just say we have a person that is terminally diagnosed, right? it's probably too late at that point to get insurance. Okay, but for those who where it's not, let's just say you have parents that are older, that are really older, and that are maybe not really thinking about increasing that. Can they take a life insurance policy that they have already and convert it over to you, or do they have to start fresh with a new life insurance? How does that happen?
So for me, I would prefer that they start fresh with another policy because they have equity in the first policy. So no
Okay.
cancel that or no need to anything like that, unless they're just being ripped off.
Mm-hmm.
That policy, get another one. It'll probably be a more expensive in that aspect. But if this one has an increasing premium, you thought
Mm-hmm.
it was stable, and then years later they're like, oh yeah, it was $28, now it's 55. That's something you're like, whoa, man. How can I keep up with this? So I wouldn't suggest that they cancel that one, but they would have an opportunity to kind of capture the equity out of that and then start another policy. But I tell a lot of people, if you already have a policy, hold on to that one and let's get another one.
Yeah, because that was your advice to me. So I can actually tell you guys that what he's telling you, he is for real. Because I got the very same advice before I even invited him onto the platform, and I was, kind of searching for some insurance premium competition premiums. He told me the same thing because I have a policy on a family member that I've had it for 7 years now. He says, well, whoa, 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 hold on to that one,
Right.
hold on to that one, and let me see what I can get you at a better price over here. But you've got equity in that one already, so it's very much a truthful thing. I have a couple questions here that I want to throw your way. Emmett says he's going to sign up for a family trust tomorrow. So good for you, Emmett. Antonio says, how much is that insurance policy based on company policy or law? I'm not quite exactly sure, Antonio, what you're referring to when you say how much is that insurance policy based on. Do you understand what he's asking, that Derek?
I do and I don't. We'll need some more communication on that. But I will tell you this, Antonio. Basically, the policies, remember I mentioned the Medical Information Bureau report? So that report, what it does, it qualifies you on the level. So if you have something that's considered a detriment, then you would go under a graded process, the 2-year grading period. So that's by law as well. So if you're healthy and there's no issues, then you would just be signed up regularly with the best rates possible. Now, the
Mm-hmm.
unfortunate aspect of that is if there are some illnesses or detriment to health opportunities that the person may be going through, then you'll get a lesser value for things of that nature because final expense maximum again is $25,000.
Mm-hmm.
You
So the maximum. So what's the minimum they would insure you for?
can go for 5,000, 10,000, things like that. And I'm very connected to the funeral industry and things of that nature. The average funeral, right? 12,000 to 15,000.
So what's the average for cremation now?
Cremation, to my understanding, is 8 to 5,000.
Yeah, because it used to be in the hundreds, and it's not hundreds anymore. It's in the thousands now, low thousands, and so that's even that's kind of crazy. So speaking of funeral homes, how do insurance policies work with funeral homes?
So what they do is that, let's say if somebody passes away, what you would do is you would take the death certificate to the funeral home, have that conversation
Mm-hmm.
with the home, and say, my mom or dad had insurance, or whoever the person may be. Okay, can we get a copy of the insurance policy? And most funeral homes will take the lead by communicating directly with the insurance carrier. And if
Mm-hmm.
there's anything left over after the funeral, after the negotiated funeral service, notice I said negotiated, after the negotiated funeral service, if there's something left over, then the funeral home, depending on who you deal with, will give you those funds.
Got you. Okay.
Mm. Now, if you just
So,
go in,
so, so,
hey,
so is there ever an instance where they won't work with an insurance policy? Do they ever have an instance where they're like, well, no, we don't work with that company, or?
no, I've never encountered that.
Okay, okay, all right, all
That's the
right.
ones are just like if they got a $3,000 policy, which I've seen
Yeah.
people uh
Mm-hmm.
dollar policy, that could be a negotiated approach for a cremation.
Got you. Okay. So family, let me just stress to you again, when it comes to whether you have children or you don't, but I'm especially talking to people with children. I am especially talking to you. Let me get real close to my camera. I'm especially talking to you. Okay? Get insurance on your children.
Goes
It doesn't cost that much. We're talking you could get $30,000 on your child for less than $10 a month. Okay, if they're healthy, you can get that and build equity in the life insurance policy. Here's another thing, people. I know a lot of you are not here in Toledo. It doesn't matter. It doesn't matter if you're in Toledo. Derek works with anyone, no matter where you are, what city, what state, long as you live on this planet Earth. And I mean, he might one day deal with people in space too. I don't know. Okay. But as far as we are concerned here, at least in Ohio, David, you're licensed in Ohio, right?
Yes, I am.
But
I'm like
can you work with getting them insurance policies if they're from, let's say, Texas or Tennessee or?
I'm licensed Louisiana, Texas, North Dakota, Michigan, all the way across. So yeah.
Okay, so now you see how nice he is, right? You have no reason to fear. Okay, a lot of us won't talk to insurance folks because they're pushy, right? We feel like they're pushy. Or they're trying to sell you something that you're really not ready for now, or they're going to push something off, and you want to put it off because you feel like you have problems, health problems. Well, he's already told you if you have health problems, so what? After 2 years, so okay, you get a certain amount of money. You don't, and in the meantime, you're not paying out of your pocket to a point where you can't afford it. It's very, very reasonable. And it's very, very prudent that you have it on your children nowadays, especially again, not just to get buried, but to build generational wealth. To build generational wealth. You may already have properties and you may have your own home, you may have some rental properties, you may have a couple cars. Okay, all of those things at some point will deteriorate, people. But by the time we're older and our kids get to be in their teens, how many people do you know, unless it's a collectible car, okay, do they have a car for 10 years and they pass it on? By that time, it needs all kind of work, right? It needs all. That is not an asset to pass off onto your kids. It's just not. If they try to resell it, they may get 2,000, maybe $1,500 for it, right? Or homes are definitely something to hang on to. You have equity, what have you. But again, homes need repair. What happens if something happens to you when you pass away and your house needs a new roof? New roofs now cost anywhere between $12,000 and $20,000 now. Who's gonna pay for that? Do
Right.
you want your family home to go in disarray if something happens to you when one of your children may need that home? You may have an older child and then a younger child who's going to need a caretaker to live in the house and take care. What happens when those, and I've seen this. I have seen children inherit homes, try to live in the home and can't afford to take care of it, cannot afford to take care of their home. And the
Somebody's
parents,
I'll be right.
parents had,
Somebody's
go
at my
ahead. Okay, that's okay. But I have seen situations where people leave assets to their children and the children could not take care of them. Okay. Another thing that Derek mentioned earlier, and I think one of the folks in the feed had mentioned, talking about getting a trust. If you can't afford to get yourself a trust, get yourself a trust, okay? Because your trust will determine who is paid and who is not, as far as your debtors are concerned. Because the person who is a trustee of your account will make those decisions, okay? But when your life insurance policy goes into that, that makes sure that your children, especially if they're minors, their money is there when they need it, okay? So I just don't know how to stress that enough, everybody. It's nice to have life insurance. And if you just have a little bit on the job, $40,000, $50,000, that's fine. If you have 5 kids, that's $10,000 apiece. That is not generational wealth. We have to start thinking along different terms when it comes to life insurance. Think about sustainability. Okay. Think about generational wealth sustainability. If you can afford it, do it. Eliza's, she mentioned some things. She's got health issues, autoimmune, this, that, and the third. Okay. Start off with the life insurance and you still have the 2-year waiting period. And I know who you are. You are young enough to wait 2 years, ma'am. Okay, you're young enough, you can wait those 2 years, get the minimum basic coverage, and then after 2 years, if something happens, then your son has coverage. He's got something to carry him along in life. So think about that.
Yes, indeed. And another thing is that basically, you know, protect your family. Because when I sell a policy, I always end with thank you for protecting your family. Because when somebody passes away, it's a sorrow and moment, and it's very
Mhm,
sad. But
mhm,
you have enough time when you have life insurance to properly grieve,
mhm,
right? So if
mhm,
you got to figure out the arrangements, oh my God, I miss this person, I love them. Putting a GoFundMe to that.
mm,
Add asking family members, can you pitch in?
mhm,
Add figuring out how to get T-shirts made. So y'all bunching enough money to get some T-shirts made and things of that nature.
mhm,
The money you getting to put them T-shirts together was 1 month's premium.
mhm,
So I mean, there's ways around it, and the conversations that I have with people who don't want to talk about death. I just say, listen, this is an investment of your life.
Mm-hmm.
Or just like you purchased a home, if anything happens to you, who's this home going to? Is it going to
Right.
be closure, or are you going to be passing this off to one of your loved ones?
Mm-hmm.
That way.
And you know what? I'm gonna be the devil's advocate here. I've been to a couple funerals where family and friends have said, "What do you mean they don't have life insurance? Why are we doing a GoFundMe? They had enough." The gossip starts, and then the downing. It just happens because it's just the nonsense that happens when you ask other people for money to take care of business that you should have taken care of. It becomes it's a circus after that. It's a sad thing to say that, but it becomes an embarrassment to the family when we find out, or if someone finds out that no insurance was had, but a person is driving a $80,000 car, or, wearing the best of clothes or what have you, and then they pass and then they had no insurance and everybody's like, what?
All that,
What?
all that,
Yeah. So it may behoove you guys, and again, it depends on how open your family is. If you have somebody that loves to live the luxury lifestyle, but they don't take care of necessities like this, maybe you all as siblings can get together and say, well, hey, should we get policies on so and so and such and such? I talked to, my brother, my sister, my nephew. He doesn't have insurance, and he doesn't object to us buying insurance on him. It's just all about having the conversation, right? It's
right,
about having the conversation and not looking at it as voodoo or taboo or however you want to say it. It's just a reality right now that this is something that's available to us. Now the question is, do we take advantage of it? Let's look at it this way. And Derek and I were talking about this earlier, because I said, it's like, who nobody likes a sales pitch or this thing. He says, I don't treat it as a sales. I tell everyone to thank you for protecting your family. That's what he told me. But when you go to the grocery store and you buy groceries for your family, you purchase those groceries, okay? You bought something that will sustain your family for the week or the month or what have you, right? You still had to buy those sustainable products, right? You still bought them. You need them to live, to provide for your family, to give nutrition to your family. And life insurance can be looked at that the exact same way. You are buying a necessity. You are investing in a necessity that will sustain your family, your children, your mate, your spouse, however you want to say it. It's a sustainability issue. Or, as I mentioned before, an alternative word to that sustainability is generational wealth.
right.
Okay. So I just are there any closing words? Because we've already gone over time, and I'm okay with that because this is such an important topic right now. And I really hope we can't change what happens in the past. We can't change the babies and what just happened to these young people. But from this point forward, we have got to make changes, and this is something that you can make in your own household. You can make this change in your own household. You can make the change if you want to make the change, if you want to upgrade, and you don't even have to tell anybody about it. Take it, purchase it, put it in a trust of your files, in the drawer, the dresser, whatever. You don't have to tell people so that you think somebody's looking for your demise, but this is a personal satisfaction for you to take care of this thing, and to know that if anything does happen to you, your children, your mate, whatever, it's taken care of.
Yes. I'll leave you all with a final communication. And this is a side note. I had three sisters who came together and got a policy on their father. The mother passed away a while ago,
Mhm.
but the father, he's still able-bodied and things of that nature.
Mhm.
And I guess one of the sisters experienced the GoFundMe process from a previous family member. And they said,
Mhm.
we can't go through this with daddy. All three of them came together with the support of their father, and they got a decent policy on their dad. All
Mhm.
three of them pitch in to pay it, but they
Mhm.
wanted to make sure that our dad is not going out like that.
Mhm.
That's one example, and you brought that up earlier. But my final words is, hey, protect your family. Figure out a way. You don't have to get a lot. If you can't afford a lot, get what you can afford. But life insurance is key, and GoFundMe is not
Mhm.
life insurance.
Right. Right. Amen to that. Amen to that. Antonio, the one thing I can tell you about insurances, I know we don't trust insurance companies. I would definitely say you're right about that. You are absolutely right, because a lot of insurance agents are out to get the dollar, right? They're out to get the commission, if you will. If I can say anything and get this across to everyone who is watching right now, is you must absolutely make an established relationship with your insurance agent that you trust.
Right.
This is the person that you will go through the next 15 years with. Hopefully, and this is the person that's going to be honest with you. This is the person that's going to, when they look at your background, they're going to say, okay, you have this issue. This is why your insurance policy is a little higher, or this is why you may not be getting so much. You have to look for a person who is, listen, I wouldn't have put him on here if I didn't believe in him. I'm telling you, everybody out there who knows me knows that I'm not putting just anybody on my platform. If you go back and look at the last 30 shows, these are people that in one way or another I have dealt with, or I have had my booking agent do his due diligence on people that I've put on my show. And I'm telling you right now that this is somebody that I can say I can get behind him. I can get behind him because of his honesty and because of how frank he is. And I'm going to tell you something. Whether he makes, whether he closes the deal or not, at least you're going to know where you stand. That's the deal. And if you want to take that and go and compare it with another insurance agent that you don't know, let's see how that goes. Let's let's see how that goes. And I say that because I've done it. Because I have done it. And this is why, and I have had different life insurance policies over the years. And now I'm a little bit more prudent as to how I handle these things because I carry life insurance on other people. So yes, I'm very much into hearing the truth. And when you hear the truth and you're cool with it, you understand that's the person that you should be dealing with. So I'm highly recommending him. Let's see. Porter says it's very necessary for our community. Absolutely, Keith Porter. I hope that this message is a topic of discussion on your show at least once a month. Bless your heart. And Derek and I talked about that. We talked about that, and I'm so glad that you brought that up because it has to be. Literally, we've got to put it in the forefront. We got to put it in the faces. We have and encourage people to watch this podcast, you guys. For everyone that you know or you work with, if you have to print a little slip out and put it on the board at work, or put it on your pages and share them, this is the opportunity for us, for all people, okay? But I'm gonna just say it for black and brown people, or for people who really need insurance, because we don't carry insurance, okay? I'm just getting in the real with you guys, right? If you don't carry insurance, there's no reason after talking to Derek that you don't get some kind of life insurance for you or on your children. Even if you feel like you may not be able to afford it for yourself, get it on your children. Because these babies are under attack nowadays. These children are under attack.
Say it again.
And if you know anything, you know how I get on my horse and I start riding that horse and I'm talking about the different types of attacks that these kids are dealing with now. But all of us, we deal with a different kind of attack nowadays of a spiritual nature. So we have to understand where we are in the stream of time and what is happening right now, why we see what we see. And in the meantime, do what you can to protect your household. It may not be much, it may not be everything, okay, but it's got to be something, right? It has to be something. Do it, please. Keith Porter says, do it, please, right? What I want to do then, right now, is I want you to give everybody the way to contact you.
Okay. The way to contact me is at NH Insurance one .com. I'm tripping. Okay. NHinsurance1.com. That's my website. And basically, I'm on Facebook at Derek Capito. You can reach me at DERRICK CAPITO. Okay. That's my Facebook post. Instagram is, I got to change it, but it's DLO42.
Okay.
Day. But yeah, my website again is that, and you can reach me by phone. Contact number is 216-544-4603. And again, it's not about the sale with me. My motto is about the education. There's a lot of customers that I talk to, I can't afford that. Well, at least you know.
Right, exactly. There it is. As we used to say, whoops, there it is. There, right there. At least get yourself informed. Understand that you need to know and you don't have to have a college degree, you don't have to have a PhD, you don't even have to have a high school degree to understand dollars and cents, right? As the oldsters used to say, if it doesn't make what?
Dollars, it don't make sense.
There you go. Okay, so we got to make this thing make sense, right? We got to make it make sense. So this is what I'm going to do, you guys. I'm going to bring Derek back next month. I'm going to bring him back because I think we need to keep this before our community. I think we need to keep this before everyone, black, white, yellow, green, whatever. Because if you're not upper class, then you're down here with the rest of us, okay? You're not rich.
Right.
I don't even think there is a middle class anymore, okay? So this is something that we probably should do to build generational wealth for us, because by the time everything boils down to where we are right now, there's no middle class, folks. We're going to have to struggle to, most of us are doing that now. Even if you live fairly comfortable, I think the statistics are that we are one paycheck away from being put out of our homes or losing our homes for those of you who have mortgages. So being realistic, come on, you know where you are, and I know where I am, and Derek knows where he is. Okay, we need to be realistic about what we are and what we can and can't do, and this is something that we can do. Okay, thank you everyone for joining us. I got to give the biggest thank you to Derek. Thank you for coming on to Toledo to the World with DebraSue. Derek, you've been super informative, and I do plan on having you back again next month. And I just would like for the audience to grow. You guys push this video, not from me, okay? I care less. From about me, I should say, okay? Because I'm on 5 different platforms. This is something that I do for the community. I push out Toledo to the World information. We invite people from the outsiders to come in and view the information, because the information that you'll find on DebraSue's platform helps everybody. It helps everybody, you know. And DebraSue's not making a big check off this. I'm sorry, it just doesn't happen, and that's not why I'm here. I'm here to help you, and along the way, I learn information for myself that's useful to me, and this is one of them. This is very informative to me, and I myself made some lifestyle changes here. So I appreciate each and every one of you for participating. Thank you all for joining, Antonia, Keith, Eliza, everybody. Followers over on Roku, Instagram, everybody who follows Toledo the World. What I want you guys to do though is go over to Toledo to the World for me on YouTube. It's under Glass City Talent. Glass City Talent comes first. It's got / Toledo to the World with DebraSue. Go like, subscribe, and share, okay? Because this is how we actually get this information out. YouTube is probably the best platform to get the information out, but I actually get lots and lots of other people from other platforms. So I'm kind of global. All of my statistics come out in a global printout. Okay, so yeah, thank you all for joining me. Make sure you come back next week, next Thursday, same time, same place, same bat cave, as they say. Make sure you get back over here and you get with me next week. We have another really good person that's going to join me on the platform with some more very informative information, entertainment, you name it. I have all types of platform, businesses, insurances, entertainment industry, all of it. I have all these people on this platform for your use and for your entertainment. So make sure you get back with me Thursday, next Thursday, that is at 6:00 p.m. on whichever platform you choose. But come right here to back to Facebook, okay? Because this is where most of my people, I can interact with you guys. I can see all of your comments, and you are the one to bring this, sister. Thank you. I appreciate you, Keith. I hope you're talking to me, but I do appreciate this. I appreciate that because I really do enjoy what I do, because it helps the many. I do appreciate that. All right, it's 6:49. We're gonna close this show out. I appreciate each of you for being here again. I have to say that every time, because really from the bottom of my heart, I really do appreciate you all for hopping on and participating with me and making it fun for me and making it fun for my guests. Derek, you are awesome. Thank you again. And I'm going to get back with you after the show. So stay on after we tune out and go ahead and get you scheduled for next month. Okay.
Hey, thank you again for having me on your show. This is
Absolutely. Absolutely. Thank you. All right, guys, we'll see you all next week. Until the meantime, enjoy the weekend and have a good, safe, prosperous weekend on purpose. Take care, everybody. Bye bye.